Welcome to Revere Asset Management's Your Money with Danny Stewart.
The market will always overshoot to the downside and to the upside.
And Don Vandenbord.
Because it's not how much you make in the markets, it's how much of that you can keep.
Hear ye, the bear markets are coming, the bear markets are coming. Folks, this last couple weeks we had some heroes, MLK and Abe Lincoln on, American heroes, and this time I told you we were going to do an ode to our namesake, Paul Revere. So we actually used AI to generate some poems, and they did this literally in nanoseconds. So I'm going to read three that we got. They're pretty cool. I like them, and they're suitable. So here's the first one. Listen, investors, and you shall hear of markets that rise and sometimes veer. In a world of stocks, be ready to see signals of change, like oneth by land, twoeth by sea. When the bulls march with steady stride, or bears take charge with a downward slide, hang a lantern in your financial tower to signal the shifts in market power. Through the night, heed the call of alarm from every index and financial farm. A cry of defiance against fearsome tides, a voice in the darkness where opportunity hides. In times of peril and need for speed, let the hoofbeats of strategy lead. For in the hour of market distress, the wise will waken and invest with finesse. I like that one the best. There you go. Yeah, I like that one. All right. Now, the second one. And folks, literally, this is all done in like 2 or 3 minutes. Shakespeare is probably turning over in his grave. Anyway, this is the iteration number one. The investor's lantern, a midnight call. Hear now, investors, and take heed, a tale of gains for those who lead. The market's tide, a beacon to guide, 2 lanterns shine to signal the ride. The bulls advance, their horns held high. The bears retreat or prowling lie. Keep watch on the horizon near, and let your instincts conquer fear. Through every darkened stock exchange, there's opportunities through winds, though winds are strange. Hold tight your courage in the night, for risk and reward oft pair in flight. When the markets twist, when chaos grows, let strategy be the wind that blows. Be swift, be sharp, and trust the course to find where value gathers force. That's another very, very good one. And now I'm going to read you the second one. I didn't like the third one that much. All right. The beacon of wealth of midnight signal. Listen closely, investors brave. A story unfolds for those who crave. The market ebbs, the lanterns gleam, guide your path like a shining dream. Bulls march onward with heads held high. Bears lie in waiting, their moment nigh. Gaze afar where fortunes form, let courage drive you through the storm. Amidst the shadows of market sway, opportunity hides where fears betray. Grip steadfast through uncertain night, for risk and reward take their flight. When markets churn, when doubt unfurls, let your strategy shine like pearls. Move swiftly, cleanly, and trust your flair to find where gains await those who dare. Folks, remember what I said a few weeks ago, that quote that people who want safety, what was that quote, Don, about managing risk? People who want wealth learn to manage risk. People who want safety avoid risk. Folks, you're going to have to manage risk somehow. And if you don't want these big drawdowns, what's the plan? Now we're going to go into that. That's what Revere Asset is all about. It's about managing risk across the markets. It's been a very busy week, and we've got some exciting news coming up. And the mailbags were limited this week, so we're going to dive right into the markets in just a sec. And Don's going to actually talk about how we manage the risk and downside. Everybody's worried about, because of the election and the markets at all-time highs. So everybody wants to know, what's the defense? All right. And we're going to get into that very detailed. The 2 articles I do have in the mailbag. One, will rate cuts make fixed annuities less desirable? Let me save you the time to read it. Yes, they will. If rates go down, fixed annuities pay less, not as good as a deal. By the way, that was an article for advisors to help them push fixed annuities before rates go down. The second one, how to help a client avoid potential trap in a single stock position. Now, this is a sponsored article, so be careful, but they do have good points about trimming. And folks, Revere Asset, we handle legacy positions all the time. But here's what they're saying. When you work for a big company, Fortune 500, and you're getting all these stock options and you're vesting in these stocks, or you buy the stock at a discount, like a stock plan, right? Well, what people do is because they work there and they kind of fall in love with their company or they feel loyal to the company, they keep that stock and their salary is from that company too. So almost all your net worth turns out to be in that company, and it'll be 50, 60, 70, 80% in that one company, and that's way too much risk. So there's ways to trim down. And one thing is, as you vest, take the profit and run. You might have to pay some short-term gains, but you can diversify away into other stocks. And you can always also use options or hedging or what have you. But if you've got a big legacy position and you need help, just reach out and we can tell you how we've done that. We've done that with a bunch of guys, Tesla engineers. We've done that with some guys in UPS, just Apple positions, all kinds of different positions. All right. So with that, I want to dive right into the markets. And Don, I want you to, obviously you're going to go over the short-term, mid-term, and long-term strength of all the indices and stuff and give us the overall view. But I also want you to kind of pull back the curtain and tell them what the plan is already set kind of in advance. So when things do start to break, what would you do and how would you, get defensive in layers or what have you? So with that, kind of let people know, because that's the topic on everybody's mind right now.
Well, to be clear, for now, these are bullish times, but I beg you to stop the rhymes.
You don't like the rhymes? I love them. I think it's a great. I think it's a great analogy.
I think that what I just came up with was way better than what AI generated.
Oh, what did you come up with?
To be clear, for now, these are bullish times, but I beg you, Dan, to stop the rhymes.
Okay. Okay, that's pretty good, Don. That's pretty good.
Don't make me go haiku on you.
Okay.
All right, Dan. You started the show with something that might confuse the listeners. You said the bears are coming. The bears are coming. They're not.
Well, no. I meant the bear markets are coming. I mean, down the road at some point. At some point, they're going to come.
Right.
We never knew when the British were coming until Paul Revere got on that horse.
Right, and that was a lead in to the poems, but
right.
Like I said, to be clear, for now, these are bullish times.
Absolutely. But we want to have a plan in advance before it hits the fan. You don't want to be making decisions under fire.
Yep. And we always do. And anybody that follows us knows that we go through it 5 times a week on our videos. We do a podcast, which is what this is. And then Ted or Connor do a weekend walkthrough as a prep for what's going on for the upcoming. But featured in every one of those market videos is the trend gauge. I am up here right now, and the growth strategy that we use is predicated on what's going on with market leaders and the major indexes. Where are they relative to their short-term moving averages? We use the 21 EMA for that. The medium-term moving averages, we use the 50-day simple for that. And the long-term moving averages, we use the 200-day for that. Depending on, and this is, I call the coveted 4 green arrows, because this is telling us, as I said, to be clear, for now, these are bullish times. But if market leaders falter, or if the major indexes start to break below their 21, that's the first thing that will happen, is these green arrows will shift to neutral and or protect. We've got them labeled grow and protect, our flagship portfolio named Grotection. Grow assets during uptrends, protect them during downtrends. And this is the Paul Revere lantern. If these start going from growth to protect, that means we're weakening over short-term time frames. If we break the 50-day, it's over the medium-term time frame. And if we break the 200-day, That's when market risk is at its highest. Every single bear market occurs below this black line here, the 200-day moving average. Until we break there, we're going to be invested in the markets, plain and simple. If we break these levels, we don't have it on here, but we also have rules for the 100-day or 20-week moving average and the 150-day or 30-week moving average. And as these levels break, we just reduce our exposure to the markets. Now, if you look at a weekly chart back here, what this does is get you out of the way of these what can be severe downtrends. You usually from the top until you break the 200-day moving average is a maximum of about a 10% drawdown. It varies. Sometimes it can be 8 to 12, but on average 10%. It's not difficult in the market to recover from a 10% drawdown, and that's what we strive to keep is things to single digits. All you need to recover a 10% downtrend is an 11% gain. The markets, they don't hand them out like candy at Halloween, but if you're positioned in the right way, it's not exceedingly bold. Now, not every time you break the 200-day moving average, this doesn't mean you're going into a bear market. Take, for example, last fall, we had a 3 waves down pullback. We broke the 200-day moving average. We got defensive, but it wasn't a bear market. We went down, I believe it was about 14% from the high to low. And then we started going back up again. We recover these levels, and Grotection, we're going to grow assets during uptrends. We're going to protect them during downtrends. We got out of the way of this 2022 bear market, losing less than half of what the market did. COVID, again, we lost less than half of what the market did. Market dropped 35% in 5 weeks. That's brutal. Now, the people that buy and hold say, yeah, look what it came back. Well, what if the COVID death rate was 4% instead of a fraction of 1%? Nobody knows where we would be right now, but I do know that our clients would have their capital intact because of our rules for protecting it. And when Dan and I started Revere, we named it under the same line of thinking. Paul Revere warned when the British were coming. We will warn when the bear markets are coming. And we go through these rules every night on our videos. We're pretty consistent. When all the arrows are green, we're going to be near fully invested in the market. From a beta standpoint, we should have more risk on than what the S&P 500 is. We have a score called Revere Volatility Adjusted Beta. We give it every night in our videos. The S&P 500, if you had your entire account in the S&P 500, that's a beta of 1. Right now, we're around between 1.4 and 1.5 because the markets are healthy. Leading stocks are acting well. We're above the moving averages. If that changes, we'll get more defensive, and that's when the so-called lantern will get hung out. And we'll talk about it, as I said, every night on video. I've had a lot of people tell us that they don't even need to listen to anybody anymore. Once they found our videos, we tell them everything that they would need to know about the market. And that's how we designed the agenda of our nightly videos. Give an overview of what happened, review the key indexes and inter-asset correlations, such as bonds, the dollar, precious metals, and then take a look at the tail of the tape, which is what we're looking at that are keys for each day entering the market. And then we wrap it up with charts of leading stocks. And that's really anything anybody would need to know about what's going on with the markets, wrapped up in about 15 minutes every night on video. Then I said Ted and Connor on the weekend walkthrough where they prep for the next week, and these podcasts where we go a little bit more in depth to the process.
So if you pay attention to that, you'll know when we hang out the lantern. The lantern's not hung out yet. It's not in the church tower, but when it is, you'll know. You'll know as soon as we know.
Absolutely. And what we've been harping on for the last few weeks, certainly, is this key area of support between around 56.52 to 56.90. As long as the market, the S&P 500, stays above that, We're not legitimately concerned in any way, shape, or form about what's going on with the indexes. Now, individual stocks, that's a different story. You could have individual stock risk. There's always relative weakness and relative strength among the individual names. We're always looking for the leaders. But several times over this week, we've tried to break below this 5690 level. But every time we did, we held, and by the end of the day, we got back above it. Today, the low is 5702. As you can see right here, we just had a stronger than normal jobs report, which the markets initially gapped up. They sold off a bit, but they're staying positive. And the impact of this is going to be that the Fed does not necessarily need to be in a hurry to cut rates. About a week ago, the odds were for another 50 basis point cut in the upcoming November Fed meeting, but now that's down to single digits. And Jerome Powell had a speech earlier this week, and he made it pretty clear that what their thoughts are is 25 and 25 over the next two FOMC meetings to wrap up 2024. And the market sold off a little bit, broke below that 5690 level on those comments, but like I said, by the end of the day, it got back above it. Now, one of the things to be concerned about is the more you hit on a support level, the weaker it gets. Think about karate chop in a 2x4. If it doesn't break the first time, but every time you hit it, it weakens a little bit. Maybe it gets to the point where you give up and it never breaks and it goes higher, or you break it and it goes lower. And that's exactly what we're looking for in the markets. And if this level breaks, we will get more defensive. We'll sell some of our positions. Actually, the market has a way of telling you what to do. We'll get stopped on some of our individual names. And then we've got rules for how much market exposure we should have, depending on whether we're above the 200, the 50, the 21 day. And we'll just follow those rules. One of the criticisms of active management, the way we do it, is that, oh, sure, you get all defensive, but you're a fatalist and you never get any of the gains. Well, that's just not true. And we explain every night on video what we do. And the process is not called protection. It's not always fearing the worst. It's grotection. So we're growing assets during uptrends. We're protecting them only during market weakness or downtrends, because historically the market goes higher. And we want to participate in that when it's happening, but we do not want to have catastrophic losses. That's what our process is designed to prevent. And all those catastrophic losses, if they're going to happen, they're going to take place below this 200-day moving average.
All right. Well, thank you, Sensei Don. How'd you like that?
And I said it. I did, Dan.
All right. So what do we got up next? What are we looking at specifically?
Well, we've got some individual names that Ted and Connor are going to talk about. Let's start off with Ted, and he's got three names he's going to discuss and give some facts and evaluate. Tedders, you want to start it off with Tesla?
Yes. Let's start off with Tesla. And to echo Dan's theme of last week, the content of a stock's character, I just want to go over the evolution of a few trades. First one's Tesla, then I'll go over MSTR, and then finally IBIT, which was a small loser. So first, Tesla. I initially bought it on September 19th as we broke above that 235 high into the gap fill area. And my expectation for this trade was a run up into the robo-taxi event, which is October 10th. And my expectation as well was once we had a solid break of 235, we'd quickly fill the gap. And that's precisely what happened. And on the nightly videos, on our weekend videos, and on previous podcasts, I talked about the key 265 to 270 level acting as massive resistance, especially if you go on a weekly chart, since Market Surge has that data box that blocks off the left side of the chart. And once we ran up to those areas, I was at a multiple of my risk. And so I decided to trim off 25% of the position. And that was on 926 when Tesla gapped up. And I thought that was a decent area to make a trim to finance the risk. And so I could ride the position risk-free. And then a couple days later, we had a sell-off that broke the 8 EMA, and that was induced by lower than expected delivery numbers. So of course, that's not what you want to see fundamentally. So I decided to take off another 50% of the leftover position, and now I have my stop at break even, which is pretty much just that 235 level. And so what I'm trying to see now is if Tesla will hold these key levels, the 21 EMA, as well as that 235 level, and see if we can build out a handle here below 265, 270. And then really what will be key is how the markets respond and how institutions respond to the robo taxi event, as well as earnings coming up in about 2 weeks. So still in this one, have a fourth of what I originally had left, and we'll see how this trades going forward. The next one is MSTR.
Very good. All right, MSTR. We also own this in Grotection.
Yep. So this was my Bitcoin proxy, and at the time I first bought MSTR over $150 on September 23rd, and this coincided with Bitcoin breaking out of 65,000, and that was a level I shared. That was a chart and level I shared on a previous podcast, I think last week. And so another level I talked about was that 180 level. And as we ran up to that area, I trimmed 25% off on September 27th into that 180 supply area. And so far, it's pulled back and it's building actually a really constructive handle now. And throughout this entire run, this recent run up the right side, it has showed tremendous relative strength to Bitcoin. And we'll get to that on the next chart with IBIT, which is the Bitcoin proxy that we use. But it showed relative strength to Bitcoin. Over a weekend, Bitcoin broke down below the 65,000 level. So that caused a pullback in MSTR. And the good thing is that Bitcoin is finding support at the 50-day. This is IBIT, but if you go to the actual Bitcoin chart, which we don't have here for now, it held the 50-day. And so that is definitely a good sign. But we want to see Bitcoin retake 65,000, especially at this most recent high. And so finally, IBIT was another position I took, and I bought this on 9/26, where it reclaimed the all-time high anchor VWAP, which is not shown here since Market Search doesn't have that capability. But it retook the all-time high anchor VWAP, which is a clear character change with Bitcoin retaking 65,000. And the next day, Bitcoin followed through, and IBIT also gapped up. And so then we went to the weekend, like I talked about, and Bitcoin pretty much had a waterfall pullback. And so I got stopped out the next day on a Monday. I gave it some time, just see how it traded, but it rejected the all-time high anchor VWAP, and that's where I decided to step aside for now. But I'm still watching this one, and it's still within this huge range. As you can see, a massive base is forming. It's over 6 months now, and these typically, once they do finish constructing the right sides and they do decide to go, they could lead to some big moves like we've seen in NVIDIA, SMCI, Berkshire Hathaway, and gold, especially gold. We've talked about that months and months ago in March 2024, where it broke out of a 10-year cup with handle. So those are just some thoughts and of some trades I've taken in the last 2-3 weeks. 2 winners that I'm still in now, trimmed up, and then 1 loser.
Great summary, Ted. What is the all-time high price for Bitcoin? And that is not going to, I believe. Yeah, that did that happen after IBIT came out? When
it did.
Was that all-time high hit? Okay,
it did.
So basically, that corresponds to this 42 level on IBIT back in March.
Yeah, exactly. Yep.
Okay. Beautiful flat base being formed here. It's only 33% deep, which for Bitcoin is from a sell-off, that's nothing. It's extremely volatile. This is, I think the volatility is decreasing a little bit because of all the institutions getting into Bitcoin ETFs. They all back them with Bitcoin. So they're going out to the Bitcoin exchanges, buying Bitcoin to support all the money that's flowing into these ETFs. And it's been really remarkable how many, I believe, beyond their expectations but for how much money has flowed into these. But you will not, there will be no shortage of news being blasted when Bitcoin breaks above that all-time high, which will correspond to 42 on IBIT. Good stuff, Ted. Thank you very much. Let's turn it over to Connor now. He's got 3 names that he's going to break down. And we're going to start off with Zillow, which is under a little bit of pressure today because the strong jobs report that came out pre-market has sent interest rates up just a tad. And anything builder related or real estate related is out underperforming today.
Yeah, so Zillow got hit with a little bit of a gap down, but a lot of things I like about this chart. And a couple of shows we've kind of talked about our favorite names that weren't necessarily at low risk buy point. So I wanted to try and compile 3 names I think are near low risk buy spots. So Don, if you go to the weekly, first just breaking down this chart a little bit. And what I like about this weekly is the long consolidation that it's had, and it's finally broken out. And we always look for relative strength. So there's no point in trying to buy in that base because, you're not really going to get any movement. But once it got back above 60, that was the level I was watching. And to me, that confirms a stage 1 breakout and is now in stage 2. And it ran quite hard into the rate cut announcement as a lot of people expected some of these real estate stocks to benefit. But since the announcement actually hit, it was actually a little bit of a sell the news event. So this one's pulling back into the 21-day. If you go back to the daily, and you can just see how once it broke through that stage 1 base, it's finally showing relative strength. And now it's sitting right back at the 21-day, a pretty linear pullback. It's got a clear downtrend line. So I like this one if it can crack that downtrend line, and you have an easy place to know if you're wrong using 21-day, give or take 2%. So this one looks actionable. We're watching it. Second name is ONON. And so as I was preparing this segment last night, and this looked really good going into today. It put in a nice reversal off the 21-day yesterday, and now it's kind of gapping up today. But overall, I still think this looks good. It's not too extended. It had a strong run up in September with the market. And then, a leader you expect to hold the 21-day when it's in an uptrend. So it's seeing a strong bounce off that today and still relatively not too extended from those moving averages. And if you look at the weekly, Don, this one continues to stair step higher. It just kind of it has a base on base pattern, and it's been a little bit choppy, but as it tends to break out of these weekly bases, that's when you get that nice momentum. So this one's definitely on the radar as well. And then story-wise, still love the product, new merchandise, new company, and see them all the time. So this one's still worth watching. And then last one is AMD. So, we talked about this one a while ago. I don't think we brought it up in a while, but so this was really strong in 2023 and had a very strong run up, and now it's starting to flatten out. It's building higher lows, and you can see that relative strength line is back above that 21-day, and it's starting to show some subtle relative strength. And another characteristic is it's back above the 200-day. And one common theme that I've noticed, and sometimes when you get a stock that performs very strong in the earlier half of the year or even in the later end of the previous year, then they go through a long basing period. And a characteristic in price that these tend to show is they start to build higher lows and get back above the 200 moving average. And that can sometimes be a low risk spot. And we can see it's doing exactly that. And if you draw a downtrend line from all-time highs, it's breaking that. So that's on the technical front. And then October 10th, they have an advancing AI event. And last time they had this event was December 6th, which produced a 19% and 80% return 1 and 3 months later. So that was well received. So that's going to be important to watch next week. But like how this is holding up and the subtle relative strength it's been showing. And Don, if you just want to go to the weekly real quick. And when you look at the weekly, it reclaimed the 40-week moving average. And to me, this still looks like a big weekly cup and handle base. So probably a lot of people, this is off their radar, but definitely given the recent price action, back on the watch list.
I want to note the earnings line here. They're considered to be from a chip processing standpoint, the GPUs that are so critical to AI, to be number 2 behind NVIDIA. And it seems like the here was based on, after that last time they had that event, and then after that they reported earnings twice, and the market was expecting blowout earnings very similar to what NVIDIA was showing, and the market didn't get that. So you can see here's their last 2 earnings reports here. There's the prior one. It ran up a little bit, and then it continued its pullback. If that earnings line, if they blow things out, and look at the sales, they're really not spectacular. 2% sales growth, 9% sales growth over their last 2 quarters. If they report a strong earnings on outstanding demand for their chips, look at what the expectations for earnings growth is in 2025. It's above the PE, which makes this incredibly cheap. Anytime your price earnings to growth ratio is below a 1, it's an incredibly inexpensive stock. Recent relative strength, Connor pointed out everything that's strong about this. You could also argue this is a giant double bottom that it broke, which would make this 187 level the pivot, but certainly a good chance for entry prior to that. And their next earnings report is less than a month away. This is something that's on our list, and we'll see what the market tells us about it. Thanks, Connor. Dan, those are 6 strong stocks, or either strong now or in the process of setting up. And that's sometimes what's most important, is watching what the next group of leaders will be, because every time the market has an uptrend, there's a turnover in the leadership, and we're always on the lookout for what that next group is that's going to lead. Back to it's 12:08 p.m. Eastern time. Let's go back and check the indexes. And we're holding this breakout above the highs of the last 2 days, back above the 8-day exponential moving average. And we pull back again and tested that 5,700 level a couple times today, but it's held both times. And like I said, these are bullish times now. And if they change, we'll discuss that every night on our videos. 15 minutes, you can be completely updated with what's going on in the markets. So you can take us home, Dan.
All right. Well, thank you, Sensei Don. And so right now, Revere is bullish on the markets, or more accurately, the markets are telling us that they're bullish at this point. So it's not time to hang the lantern out just yet. But like Don said, if you pay attention and you follow our work, we do literally a video almost every single day. The Young Guns put out a video on the weekend, and we put out something every day the market's open, 5 days a week, and we do the podcast. So we put out a piece of material pretty much 7 days a week, every day. So if you want to find out what our thoughts are, and when the lantern is being hung and risk is elevated, just go to Revere Asset up in the right-hand corner, hit the subscribe button. That you can put your name and email in, and this show will go right to your inbox on Saturday morning. But if you go to YouTube and just type in Revere Asset, just Revere Asset, and hit subscribe, this will go in by about 1 Central Time before the market closes, as soon as Zach posts it to YouTube. That's how our stock nerds do it. And then every night the market is open, we'll have a daily market insights video right into your inbox. You can always email. There's a contact button right next to that subscribe button. You can send me, and you can just send me an email directly, dan@revereasset.com. Ask for a complimentary portfolio review if you want a topic or a stock you want us to review on the show. And you can always, always, always call us old school at 855 Real Wealth. Folks, we'll talk to you next week on Your Money, not their money, your money.
Because from a pie chart advisor, you won't hear a peep, but it's not how much you make in the markets, it's how much you can keep.